YouTube, welcome back to my YouTube channel. I'm Bearish FX. So welcome back to NOOB to Pro episode 2, where I'll be teaching you guys basic market structure. So if you want to know market structure, if you want to know how to use market structure, if you want to know like because this is basically the beginning of smart money trading, right? I just want to teach you guys from scratch, from the total beginning. So in this video, I'll be teaching you guys market structure. I mean the basic market structure. The advanced market structure will be coming in the next video. So make sure you guys watch to the end and see the video. Peace. So guys, welcome back. So now let's get straight into the video. So in market structure, what's market structure? Market structure is just like the terminology that we smart money traders use to call the trend, market structure, like the structure the market is making. In a normal trend, right, it's either the market is going up, coming down, or it's ranging. Right, that's just the ticket type of things market will do or could do. Right, that's just the ticket type of structure. Right, it's either a bullish structure, bearish structure, or a ranging structure. So this bullish structure simply means when the market is actually giving us eyes to the upside, like the market is going up. Why, right? We had a bearish market structure is basically because it's basically when the market is going down, just like the name given to it, bullish and bearish, right? Bullish means up, while bearish means down. Why the third one is actually the ranging structure, simply means when the market is actually going up, coming down without an exact direction, just going up and down, right? In a certain range, right? When the market is basically in a certain range, that's what we call ranging structure. So, right, um, you know, let me show you guys something. Let me show you guys something. This is actually I have a drawing on my board, as you guys can see. I have a drawing on my screen, and so this one right here, as you can see with the arrow, is basically a bullish structure, right? Because it's actually going up, and this one right here is a bearish structure. Why? Because it's coming down. So what's the meaning of this LH that I wrote there? That are right there? It's basically how the market is moving, how we are following the market, right? As you guys can see, the H simply means high, the L simply means low, right? The HH means higher high, HL means higher low, LL means lower low, while the LH means lower high. All right. So now we have a low right here. This is basically the starting point of the trend, right? This is the starting point of the trend. While this is where the market reached before giving a retracement to this point right here. So the starting point simply means the low, right? Because this is a very last low, or this is the lowest low of the trend. So it's basically a low. Right after this low, market buys to the upside a little bit and created an high. Right. This is a low, this is a high. Why? Because this point right here is very much lower than this point, right? Than this point right here. So that's basically a low and this is a high. Right. So after the market created this high, the market created this low right here. So after this low, right, we call this one a lower high, right? Because this is a low, this is a low, this one is a low, and this one is a low, right? But this low is very much higher than this low. You guys can see that this low is in a very lower point, while this one is simply or kind of above this low right here. So this is basically a lower high. Right. Why is it called a lower high? Because we are actually going to the upside, right? Market is going bullish, right? The market is going bullish, so the market should be going higher, higher, higher. But then this is basically low. So guys, welcome back. So now let's get straight into the video. So in market structure, what's market structure? Market structure is just like the terminology that this is basically a low, while this one too is a low, right? So this one is higher than this low. So that's why it's because that's basically how or why it's called lower high. Right. So after this lower high, the market created another higher again. So this high is basically higher than this previous high. So that's why it's called higher high. All right. So if we print any high that is more higher than this one again, that will be under higher high. All right, higher high, higher high. While this low will be another lower high, right? Because the market is actually going higher, right? Market is going bullish, market is going higher, but then it's creating a low, like this market is coming down. So that's basically a low. We can't really avoid it being a low, but then we need to know that the market is still going higher. So that's why it's still called a lower high, right? A lower high because this is low and the market is going higher. So that's basically why it's called a lower high. And because this high, this lower high is much higher than this high, than this low. So it's called a lower high. So after this lower high, we have another move to the upside, right? So and market is breaking structures, as you guys can see, market is breaking structures. What's basically the meaning of breaking structures? Like the market is actually going according to the structure. The market is creating new highs and new lows. But in this scenario, the market is creating new highs. Why? Because you are bullish. Okay. So as you guys can see, that's basically what we call break of structure. We call that BOS, right? We call that break of structure. We call that BOS, right? 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 We call that So what's the meaning of BOS? BOS simply means break of structure. So how do we know when there is break of structure in the market? Break of structure simply means when the market is actually following an exact structure. When the market is following the normal structure of the market. So in this scenario right now, we simply know the market is bullish, right? And market is continuing, market continuing to go bullish, right? So we had a high, right? We had a low, we had another high. So for the market to create another high and ignoring this high, like the market to create another higher high, another high that's more higher than this high, that's basically a break of structure. Right? Because market break this high to create another high, right? So that's why we have a break of structure. Market trades now to create a lower high, then go again to create another high. So this is basically an higher high. This one is towards a higher high for this high, but this is another higher high for this high. Why? Because this high is more higher than this high. And for the market to break this high to create another higher high, the break of structure has taken place, right? Because market break this restraint structure to create another high. So that's basically what we call break of structure, right? So the market create another high again. After this market created another higher high again, it comes back down again to give a retracement. For price action traders, they say impulse correction, impulse correction, impulse correction, impulse and correction. So for the market to come to create the correction is what we call lower high. Basically, for the market to continue trend, no, the market move in waves, right? Market can never go up straight up. Market can never come down straight. Market move in waves, right? Just a normal move, the correction, real move, correction, real move, correction. So the real move is basically the break of structure, while the correction is basically for the market to regain its strength, right? Market just need to regain its strength for it to continue going to the exact or to its exact direction. All right. So now this is lower low and this is a higher high. This is a higher high the market created. So if the market retreats back down again, right? We will call that a lower low. I'm sorry, a lower high. While the market goes up again, we call that an higher high. So that's basically that about the bullish scenario. Okay, so now let's study this bearish scenario too. All right, let's study this bearish scenario. As you guys can see, it's basically the same thing actually, but then this one is facing down, right? So now we are going to be using the lower low and lower high scenario in this one, right? Because the market is actually going lower. The market is bearish. Okay. So now you guys can see very well that we have an high at this point and we had a low, right? So you guys see, it's just very much straightforward according to their names, right? This is a high right here and this is a low, right? Because this high or this point is in the upside, while this one is in the downside, right? This is a high, this is a low. So the retracement we have is a lower high. Why is it called a lower high? Because for the market to come higher, that's high. And being the fact that the market is bearish, that's a low, right? So you just call two of them together that a lower high. For the market to go up, it's high, right? For the market to go higher, this is basically high. And for the fact that the market is bearish, that's basically low. So we call that a lower high. So for the market to be in a bearish market, right, but the market to be going lower and the market to now come here to take out this low or to create another low, even in the lower structure, even in the bearish structure, that's what we call lower low, right? Because this is a low that's been created right here, and this low is very much lower than this low. It's called a lower low. All right, you get what I mean right there. So that's just how this thing is being done, just exactly as the name. It's not really hard, it's not complicated, just very simple and straightforward. So for the market to take out this low, for the market to take out this low with this point right here, that's what we call break of structure. Exactly what I explained at this point, right? Break of structure to the upside. So all these ones are break of structure to the upside, right? Because market is bullish, while these ones are break of structure to the downside because market is bearish. Okay, so now after this lower load, market created another high, but the high is still very much lower than this high, so it's still a lower high. While after the lower high, market created a lower low by creating a low that is very much lower than this low. So that's a lower low, just like that, lower high, lower low. So that's basically how the trend or the market structure is being interpreted, right? The H means the high, the L means the low, the HH means the higher high, right? The HH means the higher high, the lower HL means the higher low, the LL means the lower low, and the HL means the lower high. Right. So this is basically the basics of market structure, right? Market structure is very, very way more complicated or very hard than this, but then this is just the surface, right? This is the basics of market structure because we have series of complicated market structures, but you need to learn. I mean, The advance of market structure is very, very much more complicated than this, but this one is very much straightforward and simple. So that's basically the market. That's basically uh, that's basically the basis of market structures of market structure. So now let's get to the chart and see how the market is being printing its structure, or how we can identify the structure. As you guys can see, this is the 2 hour on GPUSD, and you guys can see that the market is very much going to the downside. That's very much simple and straightforward. Like the market is going to the downside, right? So that's a low, like that's a bearish structure. That's a very much bearish structure. So now you guys can see we had a high right here, we had a low, right? We had another high right here, we had another low. So this low high is very much lower than this high. So this one is called an higher low, while this another low has been created is called another low, which is actually lower low. So after the lower low, we had another lower high, lower low, 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 lower. You guys can see exactly how this thing is being done, right? Market is moving in waves, and for the market to move in waves, market is basically creating highs and lows, highs and lows, highs and lows. But the next high or the next low that our market will created is either will be higher than the previous high or will be lower than its previous low. So when the market is high, when the high is being higher than its previous high, it's called an higher high, and when it's lower than the previous low, it's called a lower low. Just example, just basically how their name is very, very much simple and straightforward. Exactly how their name is, and you guys can see that I actually marked out series of breakup structures right here. So you can see I named this one BOS, BOS, BOS right here. Why do I name them BOS? Because the market is actually creating a structural lows, right? Structural lows. Market is taking out lows to create another lows. So in the process of the market creating another lows is basically what we call peak of structure, break of structure, because market is breaking structure to the downside and market is creating another structural points, like structural lows, right? You guys can see this is basically the last low that we have before the market retreat to the upside. So the market retreat to the upside to create another low. So you guys can see that this point right here, even though it's broke this last low with a week, you guys can see that this point right here is basically more lower than this low, right? So that's basically a lower low. And for the price of the market to go lower than the previous low is what we call break of structure. The break of structure has taken place, right? Because the market broke that structure even at its direction. Like market broke the previous structure, the market broke the previous low, right? To create another low, to create another swing low, right? So after the market created this low again, you can see market retrace to the upside again, and then market comes back down to create another lower low that's even very lower than this one right here. Right. So that's, you can see how the market is going low, lower high, lower low, lower high, lower low, lower high, lower low. Just simple and straightforward like that. And then I hope you guys really understand what I mean in this video. You guys understand what we call highs and lows. You guys understand what we call break structures, right? So now, what do we call change of character? Change of character is very much simple, right? And here just a chart. We call it SHOCH, chalk, right? What's change of character? Change of character is simply when the market disrespects a structure. I mean, when the market give us a high, low, higher, higher low, higher high, and a lower low, right? You guys should just keep, or you guys be very, very, very attentive because we are now getting to the hard part. Okay, so you guys can see that we had a high, we had a low right here, we had a high, low, high, then we have a low, right? A low that's even lower than this one. So you guys can see that we have something really, really different from what I've been teaching you guys, or what I've been showing you guys. We have a low, high, lower high, sorry, higher low, higher high, higher low, higher high, then we have a lower low, right? Why do I call this a lower low? Because this low is very much lower than this low. So now the market has now turned from bullish structure to bearish structure. What do I mean by that? Like, had it been the market as market just had it been the market just come here right here, come to this low, even like created a low that's not lower than this low, and then go back up. That would be a normal, lower high. That would be a normal lower high, right? But then the market created a low that's even more lower than the previous low. So that means we now change from bullish structure to a bearish structure. So that way we call change of character, right? For the market to change from the bullish character to a bearish character, right? So now interpreting the structure as how the print is now low, high, lower high, higher low, higher high, higher low, higher high, then a lower low. What do you expect right now when we see the market has turned bullish, has turned bearish from being a bullish structure? Now, what we expect is just like a lower low, and that lower high, and that lower low, and that lower high until we see probably a change of character again in the nearest future. What I mean by that is something like this. After that we had something. After this lower low, we usually have something like lower high, right? Because this this low down, this high is basically much lower than this high, so we call it a lower high, then a lower low, lower high, lower low, until we see another structural change, like another character change, right? If the market created another high, like a high that's very much lower than this high, or the high that respects this high, right? That will be another change of character. Why? Because market now change from being a bearish market to a bullish market simply by creating a lower high, a higher high instead of a lower high. I hope you guys understand what I really means, and you guys can see that these things are very much simple and straightforward. Actually, very very much simple and straightforward. So now let me show you guys example of a nice change of character in the chart or in the chart. So you guys can see, according to what we see right here, you guys can see that we are very much bearish. Like market is very, very, very bearish. What I mean by that is you guys can see we are the low, high, we are the lower low, lower high, lower low. So you guys can see that in this scenario, market is created an higher high, right? Market created an higher high, right? Because this high now we just expect this high right here, right? Instead of this high to be lower than this high is higher than this high, right? So that's basically an higher high. Market supposed to create a lower high, right? A lower high, like a high that will be below this high, but then market created a higher high. So that with this thing that the market does, you guys should know that we had a change of trend, a change of character. So you guys can see that I mark that out as a change of character, all right, as a chalk. So now we are now from bearish structure, we are now bullish. Market now shift from bearish character to a bullish character. So now expecting what we're expecting right now is just market to create a lower high, right? You guys can see after this higher high, market created a lower high, then market is now going to create an higher high again. Very, very much simple and straightforward, guys. This is basically what we call structures. So, and in the next episode or in the episode 3, where I'll be teaching you guys the advanced market structure, or we teach you guys what we call structures in structures. I mean, trend in trends for the price action areas. They call it trend in trend. Why in smart money we call it structure in structure. Structures inside structures, where we have probably like bearish structure within a bullish structure, or we have a bullish structure within a bearish structure. Basically, how it is. So that will be a little bit complicated, but I will advise you guys to just go learn about this one very well and back test it so it looks very, very much simple. So you now watching the next video will be probably like you just broaden your knowledge about structures. It won't be really, really much hard or strange in your eyes again if you guys say it. So that'll be all for this video, guys. Make sure you guys watch this video. I really appreciate you guys for watching this to this point, and I hope you guys back test and learn what I teach you guys in this video exactly in your chart. And if this video help you in a way or the other, make sure you subscribe to this channel, like this video, and join my Telegram channel where I drop free setups. Join join my Telegram channel where I drop free setups. Make sure you follow me on follow me on Twitter, and just make sure you subscribe to this channel, guys. Make sure you subscribe to this channel. I'm putting a lot of work in this channel, so I need support, right? I need support. I need growth. You guys just support me, guys. And that'll be all for this video, guys. See you next one. I'm Rishi. Peace.